this week, Investec announced that it's made moves to bolster its credit team on African opportunities. Stephen Loubser has been appointed as the portfolio manager at Investec Asset Management, and he joins us now from our studios in Cape Town. Stephen Loubser, first and foremost, congratulations on your appointment. And then just tell us about what you envisage the crux of your work is going to be.
Lerato, thanks a lot for hosting me on the show. Yes, it's a great opportunity to be joining Investec Asset Management. It's a very successful team on the credit space. They've done fantastic work in South Africa, building the business out. And Investec Asset Management has been in Africa or outside South Africa for over 10 years, investing on the equity front in listed and both the unlisted space. So really what we're looking to do is exploit the opportunity in investing in the various markets in Africa, more on the credit side, to give our investors, our third-party investors, the returns that are inherent in those markets.
Now, experts say that corporate credit has been identified as the next frontier for Africa. So what strategies should banks and asset managers be looking to employ as they try to gain market share in Africa?
Absolutely. I mean, we've seen across the board corporate credit outperforming, being a very good asset class, and we've learned from our track record in South Africa that the third-party investors are looking for those returns. So banks and asset managers should be looking to the frontier markets into Africa, and that's what Investec Asset Management has done. So, I mean, there are a number of banks with presence in those markets. They do lend, they do have facilities, they understand the markets. But on the asset management side, I think it's new frontiers. And we're really there to be a market participant, and you require all the various market players to be in the markets to actually have a market.
Okay, because of the relative weakness, as it were, of the African private sector, there is a sense that the approach ought to be less about the company per se and more about the industry. What approach will you be taking as you go out there issuing corporate credit? Will you be saying we're looking at the company valuations, its potential, or we're looking at the potential of the industry and the economy of a country to grow?
Look, I think we'll always be applying a top-down approach. So, I mean, first we'll be looking at the countries and the geographies, and we've got a very strong emerging market team that will give us the macro view. Then we'll drill down into the various sectors and then into the actual company, the balance sheet where you're going to be investing your cash. So it's really a top-down approach.
Okay, now as African companies grow, they do need capital. What lessons can be learned from your South African experience, especially over issues of debt and leveraging?
You're very correct in that. A lot of businesses are moving into Africa, South African businesses, and they all need debt to grow. And I mean, really what we would be doing is looking at the actual business, the cash flows of the business, and making sure where we invest you don't overgear, and really making sensible investments. There's a lot that we've learned out of the South African investments, South African market, and across our emerging market platform. So I think it's really a cautious approach, trying to stay away from themes, really looking at the fundamentals. So we're not going to be taking a big play on some type of theme. It's looking at sustainable, conservative growth in businesses that have the fundamentals to support it.
I mean, Investec always prides itself on having been able to operate in a high leverage and high yield credit market. What's your view of the African credit market and the sort of booby traps, for lack of a better word, that may exist and how to overcome them?
The reality is, when you're putting debt into a business, particularly in the leverage side, there's always risk. So the first approach is to look at the business, understand it, make sure it's money good. So it's going to the fundamentals. And that goes back to what I said. You're not trying to invest in a theme or a fad. It's actually real business with the underlying drivers. But you can't always get it right. You can't foresee everything. So given that, it's really diversification. So we look at it on a portfolio approach. So you'd be really trying to diversify across various businesses across various markets. And that in that scenario, if you do have a hiccup or something goes wrong, you're really still going to give your third-party investors the necessary returns. So it's diversification across markets and across companies.
Okay, there are limitations though, Stephen, that you have to be aware of. Even though Africa is expected to grow steadily and governments are managing their economies better, and Africa is offering better returns than some other emerging market economies. There are limitations such as the regulatory environment in which you're operating and the need to deepen credit markets and capital markets in Africa. How are you going to navigate your way around this space?
Look, once again, I've said Investec Asset Management team has been in Africa for over 10 years now and invests in approximately 100 various businesses. So it's really that cumulative knowledge and understanding of the actual companies, the markets, and relying on that expertise. So it's really experience that helps you navigate through them. And so it's, once again, it's a top-down approach. It's understanding the macro environment, understanding, and then going from the bottom, understanding the actual companies and the various regimes. So it's really experience. And I mean, that's why joining a team like Investec Asset Management really gives you that background. And we've been there long enough to understand the pitfalls, understand the regulatory environment, and we're always very close to the markets, and it's having that on-the-ground presence, being in the markets, and investing in the businesses.
And finally, just in terms of your assessment of where it's hot property in Africa at the moment, the hotspots, many people very interested in Nigeria as some of the 9 rescued banks are up for sale. People going into that market, East Africa, maybe Kenya, but newer markets like Uganda, like Ghana.
Absolutely. Well, I mean, when it comes to hot markets, really what we're looking for is stable political environments, large populations, and growth. I mean, growth is the key determinant in terms of how investments will perform. So we really split Africa into 4 regions. You would have North Africa with the key populations and key markets there. So it would be Morocco, Tunisia, and Egypt. Lots happening there, very big economies, often overlooked when you speak about Africa. Sometimes it falls into the Middle East. So that's an area where we have a presence. We'll be looking at businesses. Then, as you've correctly said, Nigeria, and more recently Ghana with the oil and gas findings. And then looking into East Africa, which we would really be saying Uganda, Tanzania, and Kenya. And then going down to sub-Saharan Africa, which are the usual suspects, Namibia, Botswana, and South Africa. So that's how we break it up. Where will we be spending most of our time or investments? It's really in the larger economies. So we can sum it up as Egypt, Morocco, Tunisia, Nigeria, and Kenya. And then looking, then obviously back into South Africa. But we'll be following some of the smaller economies where we see good risk-adjusted returns.